You all seem to like my entire Roth IRA reveal video, so I decided to go ahead and do the same but reveal my entire stock portfolio within my taxable brokerage account. I'll reveal my portfolio allocation, discuss the individual stocks I own, the returns on those stocks, as well as my future plans. I'm FamiLei, a money nerd who wants to help you build confidence in your financial and investment decisions. Subscribe and join the FamiLei. I use multiple investment platforms, mostly to understand the differences between them and really select which one vibes with me. The stock portfolio I'll reveal in this video is going to be on my Robinhood taxable brokerage account, but I did recently put a request to transfer my money into M1 Finance. M1 Finance makes investing simple by letting you create custom pies where you can set the allocation for each ETF or individual stock you want. It handles tax efficiency in the back end so you don't have to worry about any of it, and offers fractional shares so you can own 0.0001% of the most expensive stocks. For a limited time, M1 Finance is offering a promotion where if you invest $100 in a taxable brokerage account or $500 in a retirement account, then you can get $30 for free to invest. Sign up link in the description below. Some of you have been asking me why is it beneficial to have both a taxable brokerage account and a Roth IRA, and I simply have both accounts because I've maxed out my Roth IRA, so with my leftover dollars I'd rather use it to invest in the stock market rather than save it in a bank account or just spend it all. Typically, before you even open a taxable brokerage account, you want to explore the tax advantage accounts that are available to you. Now, this differs between country and country, but at least in the United States, you have a couple of options. For most people within the United States, the first investment you want to do is to invest within your employer-sponsored account up to the match. For example, this could be 100% match on 5% a year. If you put 5% of your salary a year, your employer also puts 5%, and it instantly doubles your contributions. Then if you have access to a health savings account or an HSA, you want to max that, and then afterwards max your Roth IRA. Then go back and max your 401k or your employer-sponsored account, and finally after all of that, you can consider opening a taxable brokerage account. You may qualify for some or none of these accounts based on your income, age, or health plan. And although it's not advised, you can invest your money within a taxable brokerage account if you intend to pull it out within under a year or a couple of years. You can liquidate your investments in your taxable brokerage account pretty easily. Just sell your stocks and transfer it to your bank account. But I would advise you to max out your Roth IRA first, because the contributions for your Roth IRA can be pulled out without any penalty. It's only the interest within a Roth IRA that will invoke a penalty before 59 and a half years old. Keep in mind that this investment order into the different accounts does not include investing in real estate, a business, or yourself, which you should always be doing. I'm gonna be honest with you all, I avoid talking about individual stocks because I'm not a financial advisor and there are many people way smarter than me in the world of investments. The majority of my investments are in low-cost index funds in the form of mutual funds or ETFs. I'm a simple long-term investor and don't try to time the market. Timing the market is incredibly difficult because you have to be correct twice when you buy a stock and then once again when you sell a stock. And that is incredibly difficult to do. But with that being said, the allure of investing in companies and hopefully striking it big still entices me. So my investments in my taxable brokerage account within Robinhood are all my riskier investments that I have. Once again, the majority of my long-term investments are in low-cost index funds in the form of the S&P 500 or the total US stock market index fund. All right, so let's pull up Robinhood. So right now, my stock portfolio is valued at about $62,000. Within the past day and week, it has decreased pretty substantially by over 5%. There's no better time to share my portfolio than when it's in the red. Looking through all my stocks, basically a lot of my stocks are in the red, but This just goes to show you that the stock market is very volatile, and when you invest in individual stocks especially, the value of those stocks will fluctuate greatly. I mean, just 1 week ago, my portfolio was about $3,000 more. Over the month, it's been pretty steady. Over the past 3 months, it's grown about 24%, and then over the year, about 75%. Now, all of the stocks and ETFs that I have within my Robinhood account have been purchased within the past year. Every single year, I reevaluate the stocks that I have and then decide to sell some or all. And in the case of last year, I sold them all and completely restarted building my portfolio from scratch. So here we can see every single asset that I own. So I'm gonna go to my equity within each, and you can see that I have a pretty big position within FTEC, which is Fidelity's Information Technology ETF. So I'll just scroll down to see a couple. I'm gonna go over every single individual stock and explain why I decided to invest in them. I also have Bitcoin here at the bottom. And then if we go into my total return, you can see the dollar amounts that I have, but I prefer to look at the total percentage of my investments. Bitcoin and Beyond Meat has not done hot for me, but pretty much every single other stock has done fairly well. Amazon is the final one that has gone negative for my investments. Before I dive into the exact stocks that I have, let's go into my portfolio allocation. So here, the majority of my portfolio in Robinhood is stocks, about 73%. Now, in my entire investment portfolio, the majority are actually ETFs or low-cost index funds in the form of mutual funds. So I have 73% in stocks, 26% in ETFs, and then a very small percentage of 1% within cryptocurrency. All my cryptocurrency is within Bitcoin. My ETFs are usually sector ETFs, so they're heavily in tech and financials. And then my stocks vary from all over the place, from manufacturing and materials to tech, energy and water, finance, and consumer goods. Typically, when you have a long time towards retirement and when you expect to pull out from these investments, you can be a bit more aggressive with your portfolio. So as in my case, I have a lot of my portfolio within individual stocks because I am comfortable with that and am willing to take on more risk in the hopes that my portfolio grows at a faster rate than, say, the S&P 500. And for those of you who don't know, the S&P 500 is simply the top 500 largest companies within the United States. It's a fairly good benchmark to compare your investments to, and 95% of financial professionals can't even beat that in the long term. All right, let's dive into my stocks. The first one has my largest position within Robinhood, and it's FTEC, the Fidelity Information Technology ETF. Now, this has a ton of companies within it, all focused in the tech space, such as Microsoft, Apple, Visa, Nvidia, and etc. Within the past year, it's grown about 43%, but I purchased it less than a year ago. So the average cost that I purchased it was at $97, and it's now at $107 for a total return of about 9%, which isn't bad. In the case of a broad low-cost index fund, you're not going to see a huge spike or huge decline simply because it's diversified and has several hundred companies within the fund. I'm personally bullish on tech, and I believe that breakthroughs within the tech sphere will shape society in a way that hasn't been done before. I mean, imagine a world without Macs or PCs. Next one I got is FNCL, which is Fidelity's Financials ETF. This fund includes companies like JP Morgan, Berkshire Hathaway's, Bank of America, and name pretty much any other bank. The average cost of my purchases for this was at about $31, and it's grown to $47 for a return of about 51%, which is fantastic. This is fun that I pretty much bought very close to the bottom of the stock market crash. In my mind, banks and other financial institutions are not going to stay down for long. They'll eventually bounce back up and then reach new highs. My only regret is not investing more. But really, no matter what you do, you're probably going to regret your investment decisions. If you invest poorly and you lose money, you're going to regret buying that stock. If your stocks do well, you're going to regret not buying more of it. Next up is ARK. This is an active ETF focused on innovation, and this fund is led by Cathie Wood, who has been gaining a lot of traction with her idea of investing in innovation. They invest in disruptive companies in areas such as DNA sequencing, Internet of Things, automation, and energy. Some companies included are Tesla, Roku, and Square. I made a whole video explaining all the different ARK ETFs out there, and you can check it out here. It's done really well within the past several years, and personally I bought it at 88, now it's at 138 for an average percent gain of 56%. Now because this is an active ETA, it has a relatively high expense ratio compared to other ETFs out there. But finding all of these disruptive companies takes a lot of effort, and it's something that I'm willing to pay that fee for to invest in these particular companies. All right, next up I got AMD. AMD is an American multinational semiconductor company that generates or develops computer processors. I personally have an AMD CPU within my PC that I use to edit videos. AMD has done pretty well for me, no, not really. From when I bought it a little less than a year ago, AMD has returned a measly 2%. But hey, I didn't lose money on it, so I'm happy. Next up, we got a similar company called NVIDIA. NVIDIA designs graphics processing units, or GPUs, for both gaming and the professional world. NVIDIA has grown a lot within the past several years, but for me, it's returned about 27%. NVIDIA is the most popular GPU designer, and I believe they are leading the way in the development of more powerful GPUs. GPUs are important for many things such as gaming and machine learning or artificial intelligence, which is what's used by many businesses today to process a large amount of data. Next up, I got PayPal. PayPal operates an online payment system to support online money transfers. It's an electronic alternative to traditional paper methods like checks and money orders. For me, when I bought it a little under a year ago, it has given me about a 29% return. Moving on to another company in the fintech space or financial services space is Square. Square is led by Jack Dorsey, who is also the CEO of Twitter. Square is responsible for technology capable of aggregating merchant services and mobile payments. Millions of small businesses use Square technology to accept credit card payments, track sales and inventory, and obtain financing. If you've ever gone to like a food truck or any small business, you've probably seen one of their white Square devices that they swipe your credit card on, and it's used to accept your payment. For me, it's grown about 53%. All right, moving on to one of my 3 investments that I've actually lost money in within the past year. Amazon. You probably know what Amazon is. It's a massive company led by Jeff Bezos. It's an e-commerce, cloud computing, digital streaming, and artificial intelligence company. Amazon literally just moved next door to me in Crystal City in Arlington, Virginia, and they're going to have a new CEO. Andy Jassy is the current CEO of Amazon Web Services, which is a cloud platform. And honestly, I think this is a really good move because Amazon is a business that powers businesses and then sells books on the side. It's gone down from when I bought it, but in my mind, Amazon has become an integral part of society and it's here to stay. Next up, we got Fiverr, an Israeli online marketplace for freelancers. When people lost their jobs from companies, they took a turn and used their skills to take on freelance gigs. Fiverr has grown incredibly quickly within the year, where I purchased it at about $115 a share, and it's now at $278. It's returned 141% for myself. It's downright one of the best investments I've made within the year. Now begins my investments within the clean energy space. I've made a lot of investments within green energy because I believe that it's the future and that we really have to work on saving this planet. And luckily, it's been very profitable for my investments. At the beginning, I didn't know which green energy companies were good or not, and so I decided to just go with an ETF and own all of them. So QCLN has all the United States companies working in green energy. Just to name a few, it's involved in advanced materials, energy storage, and renewable electricity generation from solar, wind, and geothermal. And for me, it's grown about 53%. Really good for a broad ETF. Going to my next one, it's an individual stock called Renewable Energy Group. It's a biodiesel production company and provides clean, low carbon intensity products and services. They're a developer of renewable chemicals and are out to reduce the carbon footprint. It's grown 136% for myself. Next up is another one in the clean energy space, and it's Plug Power. Plug develops hydrogen fuel cell systems that replace conventional batteries in equipment and vehicles powered by electricity. With hydrogen as a power source, cars can reduce their carbon emissions from its exhaust. It's grown 176%. Next is a solar company called Sunnova Energy. I bought this in October of 2020 and it has grown 53%. Next stock, I'm sure you know, it's Tesla. Tesla is an electric vehicle and clean energy company led by Elon Musk, a man who admitted that his own company's stock price is too high, which resulted in the stock price dropping. Tesla stock seems to have no limit, and I was wary about buying Tesla at the peak, but it's actually grown 73% since then. Tesla is definitely a long-term play for me, and I like to think of Tesla as a tech company on wheels. Next up, we got a lot of different airline companies that I'm invested in. Boeing has had their fair share of bad publicity, with several of their airplanes catching fire. But there's a pretty significant dip on Boeing, and because Boeing has a lot of government contracts which are very recession proof, I decided to invest some money into it, and it's grown about 40%. In the airline industry, I have Delta. When the stock market crashed in 2020, one thing that I was keeping my eye out was the airline industry. I honestly thought that the airlines would bounce back a lot quicker and that the pandemic would be over already. Because I love to travel and I know a lot of people do, I decided to invest a large amount of money within the airline industries. And this honestly terrified me. I would go through nights where I questioned my decisions because a lot of airline profits are from business travel. But now businesses are realizing that they don't need to send one person all the way across the country to meet up with their client. They can do the same thing virtually. This and a couple of other reasons is why I was hesitant on the airline industry, but traveling for pleasure has been increasing the past several years, and I believe at least that will continue to increase. Because of the possibility that a certain airline may go bankrupt, I decided to spread out my investments over several airlines, one of which is Delta. I bought Delta at $27 per share and it's now at $48, which has given me a 76% return. Another airline that I have is United Airlines, which has given me about a 69% return. And lastly, my riskiest airline investment is Spirit Airlines, but it has generated the most out of all airlines for me with a 146% return. Next up is a company called Beyond Meat. Beyond Meat is a producer of plant-based meat substitutes. 10 to 30% of households' carbon footprint is from food. Production accounts for 68%, while transportation accounts to 5%. If you've never had a Beyond Meat burger, I would definitely recommend it. It tastes great. This is simply a company where I believe in its mission and decided to invest in it. Unfortunately, it has lost me about 26%. Lastly, I'm gonna be honest, I got into the Bitcoin FOMO and wanted to diversify my portfolio a bit. So I put in 1% of my money into it, which I'd be totally okay if I lost all of it. Bitcoin for me has decreased about 7%. I bought Bitcoin a couple years back but decided to sell it and just use my money to buy like a Chipotle burrito or something. But I'm back in it and I'm gonna hold at least this piece of Bitcoin for several years. For my future investment plans, after I hold stocks for around a year, I reevaluate if I still want them in my portfolio. If I no longer want to own the stock, but they have increased in value, then I'll sell it after the 1 year mark so I pay long-term capital gains, which are a lot less than short-term capital gains, which is when you sell a stock within a year. Especially my airline stocks, I intend to sell them all after I've held on to them for over a year or when the quarantine ends. I do have a large weighting towards tech, but I'm okay with this because I believe that there's a period of innovation that's about to unfold. My clean energy stocks are here to stay. They make me feel good about investing and have done really well, so I'm gonna hold that for several years. Let me know what you think of my investment portfolio. I'd love to hear any feedback you have for my investments. Thank you all for watching. Until next time.